Welcome back to another episode of Blockchain Basement, where every single day we try to find a worse transition to start the show with. My name is TJ. I'm going to be your host for today's episode. Welcome in all of you live on twitch.tv for you guys that do follow us there and live in the chat. We got Corey Harden, Razmataz, Ravenboy Crypto, Chemistry, BitBoy Crypto. Oh, that's us. Nakodu, I already said Razmataz, Quantum Crypto, Riddled with Puns, all the regulars. Love hanging out in the basement, talking crypto with you guys. So as always, please engage a lot with us. Drop questions in the chat because the show really is all about you guys, and we like going down all the rabbit trails and just hanging out and talking crypto with our friends. Presented by Twitch, and today I'm going to be joined live in studio by a longtime Bit Squad audience, Sexy Rexy, as he calls himself, Rex Crypto, or Crypto Rex, joining us live here today. We've got Nick Diamandi, aka Crypto Sunglasses, pretty much everywhere. Some call him the Nicktator, some call him Hexican's worst nightmare, but he's joining us again today. We've got Emery XP, Brian Emery, as always, Spaceship Commander, not your friendly neighbor Drew, he's Spaceship Commander Biscuit Jesus with the flowing locks and the love of all things Cardano. All right, so today we're going to be talking about a handful of different things. We've got Firefox developer Mozilla goes all in on the metaverse and acquiring Active Replica, which that is Mozilla, Thunderbird, Brandon Ike, JavaScript, I think Brave browser. So a little bit of an interesting discussion there. We'll get into that a little bit. We've got this was an interesting chart I want to kind of bounce off you guys, showing the steepest correction coming after a Fed pivot, which I thought was pretty fascinating. A lot of people thinking bottom is in, or it seems pretty split to where a lot of people feeling like we're near bottom. A lot of people feel like there's one more big leg down to come. So we'll get into that just a bit. We got Jim Cramer, of course, coming out and saying sell all your crypto. A lot of people obviously calling him a reverse indicator. We'll be talking about that. He also saying recession is not going to happen in 2023. Let's see. Jim Cramer says he does not see a recession coming. Wendy says that's because we're already in it. So I'm going to be talking about some of those kind of things. But real quick, wanted to start it off.
Love that she called him a dweeb.
Dweeb. Yeah, he's a dweeb. But real quick, Rex, I just tell people a little bit about yourself, who you are, how long, like when did you get into, I guess I shouldn't ask you 10 questions at once, which I tend to do with people. Cool. How long have you been into crypto and how did you find the Bit Squad?
Yeah, dude, I got in probably late 2017, early 2018. I actually didn't even know the Bitcoin hit $20,000. I got in, I was like looking for something to make my money grow, and was looking into a lot of the traditional finance, couldn't ever find nothing, felt like it was always kind of rigged against us, and then I kind of ran into Bitcoin, bought in around $6,000-$7,000. Long story short, ended up selling that and ended up buying back at 3,500. And yeah, I found BitBoy pretty early on, and I thought he was doing some good stuff in the space. I thought he was, he was really truthful, and I felt like he was really going after traditional finance, what I'm really passionate about. So got into Telegram, met BitBoy, was talking to him. And, the rest is history. I like tokens and gems and NFTs and everything you can think about. I love it. Love it all.
They were asking how old are you, if you don't mind.
Oh, yeah, 31.
I'm answering it. There we go. Old enough to be your daddy. There it is.
Not 13.
Not 13.
Yeah, so awesome. And somebody, Raven Boy said, you don't run into Bitcoin. Bitcoin finds you. We are the chosen, which I think is very true. It's fascinating to me how so many of us come to Bitcoin. We all have different mindsets and kind of critical thinking ways of problem solving. But then we generally all find Bitcoin as a solution to a problem, whether it's, for freedom, whether it's for lack of centralization or tyranny or privacy.
Online gambling.
Online gambling, all those sorts of things. Yeah, I just saw for BitGet, yeah, you do need to use a VPN. Speaking of privacy, that's a really good way to maintain your privacy and all those sorts of things. So, yes, you do. It is required to use a VPN, which I do believe we have a few on BitBoy Crypto that you can choose from if you go to bitboycrypto.com/deals. So,
Razmataz says that Stash can sign up for the Marines.
That's right.
Yeah, you do. Actually, you kind of got a Crypto Stash kind of vibe. I could see like you and Crypto Stash being brothers a little bit. I mean, obviously his is a lot more grown out and stuff, but I could see it. I can see it. It's an East Coast Stash, we'll call him. You should use a VPN regardless. Yeah, that's a good point, Riddle, with puns. Look, guys, if you aren't using VPNs, there's a lot of pros to doing that when it comes to privacy and maintaining sovereignty over your data.
And special anime that you can watch.
You can get all sorts of things when you're using virtual private networks, and it's kind of like self-custody in some regards. Like a lot of people put it off. A lot of people use exchanges. They leave their funds on exchange. Like, I don't want to go through the work of like setting it up. But then really once you do it, they're very easy to use. They're very simple, and the benefits far outweigh the costs. So go check out bitboycrypto.com/deals, get a VPN, and sign up for BitGet. It should be in the link in this description, or we can drop it in the chat. It's 0% fees on spot Bitcoin trading. Obviously, they have derivatives there if that's what you're looking for. Don't do that if you're new to trading crypto. Yeah. But if you're looking for cheap fees, and they did just come out and do their proof of reserves, I think they showed about 244% proof of reserves. Again, don't leave your savings on any one exchange. Withdraw any profits to cold storage or to a self-custody place. But check proof of reserves before you use anybody, I would say, these days, because as we've seen, you want to verify, not trust. And we do like seeing exchanges use a lot of these new technologies to help use their users verify that they are telling them what they tell them. I use Nord. It's just one click of a button. Yeah, a lot of people use NordVPN. That's the one I've got experience with. So yeah, come on in and join us. Come on in. We're gonna sub you in for Brian, right? Unless you had anything you want to say, or he can hop in the middle. Oh no, yeah, anybody, just hop in.
Imagine.
I don't care.
Yeah, go ahead.
Yeah, Kelly.
This is your pillow.
Kelly from BitLab Academy sliding in.
Oh my god, that's
special
way
videos.
too much.
Real quick.
Sorry about that.
Well, actually, let me talk about this. This is kind of the top story of the day. Just in, Ledger partners with Apple creator Tony Fadell to develop its latest crypto hardware wallet. And here's the video here of it working. It looks pretty sweet as far as the interface. Very simple, very clean.
Interesting.
And then this was a pretty interesting take. Firmly convinced Ledger is the Apple of Web3, which a lot of people, when we're talking Web3, you're considering, you're thinking Bored Apes, you're thinking CryptoPunk, you're thinking software, communities and projects, you're thinking maybe a browser, maybe you're thinking OpenSea, maybe you're thinking, concerts and, access and that sort of stuff, but a hardware device that can hold all of your NFTs, that can really be your gateway access point into Web3. I thought this was a pretty interesting take on Ledger really being a power player when it comes to Web3. What do you think about that, Brian?
Apple, though? The Apple of Web3? That's a very, very strong statement.
It is. It's a huge statement.
I don't know.
Apple censors things, Bitcoin doesn't.
Yeah, it's kind of a weird comparison in my opinion, but I mean, sure. And then like, if you think about Ledger, it's actually was like a freaking USB drive that you put your crypto on. It's not like a big tech breakthrough or anything like that. It's nothing cutting edge. It's just that Web3 is cutting edge and they're kind of on the forefront on bringing it to the end users. Do I think that they're making the best tech in the world? No, but I think they're doing a really good job at, marketing decentralization and, not your keys, not your coins. So, but are they Apple? I don't think so.
No, I don't think they are now, but I think they're poised to become that. And if they're able to crack a good hardware device, we haven't really seen in Ledger so far as when it comes to getting hardware devices into hands of Web3 users. Ledger's in the lead far and away. Trezor, could come up into there, and there's a lot of other wallets competing, but there's a lot of software wallets that have gotten out there. But a lot is when it comes to hardware devices. We talked about the Casa node the other day when it comes to self-custody and running, self-checks and all that kind of stuff. There's a handful of other ones that are simple mining units and stuff like that. But hardware is a tough nut to crack when you're thinking about, and that's part of why Apple has their advantage. If it wasn't for the iPod device that got everybody used to interacting with their devices in their system, and then eventually the iPhone is what unlocked the App Store and everything that came since then that really makes them a ton of money. But it's really those iPhone upgrades and those sort of things. My thing is I don't see recurring purchases on a Ledger like I do on Apple devices right now.
It's just a long process. Sure, is it possible? Maybe. Crypto Thorn in chat says, can we get a comment on what MKBHD said about crypto in his latest video? What did he say, Crypto Thorn? Drop that down here. Kind of curious. He does like tech reviews. He's like one of the biggest tech review.
Oh, is it, he does like equipment and stuff?
Yeah,
yeah.
Equipment, cars, Teslas. Whatever.
It's the Sony mini disc of the mini disc era. Okay, yeah, I can see that. I've used Ledger for years. Besides that mess, they mess. Besides that, they messed with the database years ago. I never thought I've had a single issue with it. Love the stream. You guys will keep up the good work. Yeah, probably more like the headphone maker for the iPhone. See, that's an interesting take. What do you think, Nick? Do you think you could see Ledger, being a major player when it comes to Web3?
When it comes to Web3, I think that's so broad, and they're so locked into seed phrases and whatnot. I don't think Web3 is going to be it. I think Exodus is going to be the sleeper. That they're going to come out of nowhere with a mobile app. Their wallet is already probably the best hot wallet out there as far as user interface goes. They have like UI people that worked for Porsche, and I think actually an ex-Apple employee. So if they make a hard wallet that, not even a hard wallet that is for crypto, but like a hard NFT wallet where you can like display NFTs or like have your NFTs on the go for display in your house, I think they're going to come off the top rope and surprise everyone.
Yeah, I think they have they're really good product design engineering as well. And it is right now, it's in the software. So I guess maybe let me ask it this way. Who else do we think can compete in the hardware department when we're moving into Web3? Or do we think it's basically going to remain with Samsung and Apple and they've just got a lock on it? Do we see any new competitors coming out? Yeah, go ahead, Kelly.
Well, I think, unfortunately, I think the hardware wallets, the cold storage, is obviously the safest way to manage large holdings, especially if it's your life savings and such. However, I think as we see, as we see with like the issue right now, I had this conversation with my mother earlier today. She was talking about FTX and crypto and how bad crypto is right now. And I was like, people need to realize there's a separation between these centralized exchanges and, the decentralized ecosystem that we are in. And the reason I bring that up with the wallets and Web3 is that I think what's going to happen is the major players are going to be the ones that are the most convenient, that blend that sort of world between convenience and security. So I think it's going to be software wallets and software integrations with Web3 are probably going to be the front runners for a good amount of time.
I tend to agree. Software can definitely propagate and get out there a lot longer. Hardware takes a huge budget. It takes long term. You got to get them all shipped. You got to get them in the hands, and then you've got to update them. I don't know. I tend to think we will see a new hardware player come out of this space as it grows. It may be Ledger. It may not be Ledger. It may be, somebody mentioned the Solana phone. I think a little tongue in cheek, riddled with puns. We've also got the Pi phone, supposedly from Elon Musk, if Twitter was going to come up and compete. But I think there is opportunity for a hardware player in this space, and I do think we will see it come from somebody other than Sony, Apple, Samsung, who tend to dominate,
I think it might come from the Raspberry Pi community, to be honest.
You think so?
BJ.
Yeah.
No one knows, but that's not even real. That's fake.
Well, actually, that's not that big of a stretch. It's an open source driven, it's an open architecture type community, right?
Yeah.
Yeah. That would fit right into, now, obviously, it's not a very user friendly community.
Money, though. No, there's too many seeds.
Too many seeds?
And raspberries have too many seeds. They don't make a good pie.
Myself.
All my cold storage.
I'm an apple pie guy.
All my cold storage are literally Raspberry Pis that I built myself, so that Nick can't sneak
Weird
any
flex, but okay.
Them.
That's a whole nother level. Yeah, that's a whole nother level of self-custody and don't trust, verify. You really got to trust yourself on that one. So
yeah.
And I ate the seed
have
phrase.
Enough seeds?
Yeah.
How many seeds is too many seeds? Rex, go.
Endless. It's unlimited.
Hold on.
Endless
It
seeds.
depends if you're prone to diverticulitis or not.
Which I am. So, TJ, what do you think about this? What do you think about the first mass purchased Web3 NFT wallet will not be like a USB drive sort of thing. It'll be your car, because that's how they're going to track software updates. That's how they're going to track service upgrades. That's how they're going to track their parts supply chain. So this part got this car got this part, blah, 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 blah. NFTs will be built into the
Are we ready for a
console
hot
of your car.
take?
Yeah,
Whoa!
that's definitely a hot take.
Well, no,
Cars.
I would agree with that solely because Ford and a bunch of other companies a while ago tried to remove right to repair.
Yep.
So that could correlate to that. And they also were trying to do a paint that had basically microscopic logos on it so that they could spray paint engine parts and then see if you replace them or not.
And anything with autonomous driving, you're going to want that software running on a blockchain. You don't want that to be some centralized source.
I do see that as a thing, and somebody else mentioned DAG is also making a blockchain phone. It is worth noting.
Ooh, Constellation?
Yeah,
Bro, that's a sleeper.
it is a sleeper, and that's
Holy
it
crap.
probably, if I had to guess, it'd be used for if you're talking
Yes.
blockchain encrypted kind of phone to start military purposes. I know that's a lot of where they lean. And that also rings true with a lot of the new emerging tech that comes out and ends up with consumers, eventually starts with military. So
Who's buying the Elon phone if it comes out?
I'll buy one.
I bet it'd be pretty interesting. I mean, I definitely take a gander at it because they have like they're one of the first. I won't say first, but they've done a great job. If anybody's looked at any of the data on the Pi phone, even like the starting models, it's like terabytes of storage. They have, I think 2.5 times the amount of RAM that Apple phones do. It's got all kind of stuff, and it would be hooked into the Starlink, so you'd always have great service no matter where you were.
yeah, they said they got Kelly in the man widget, poor guy. Yeah, Kelly's sitting in the middle seat today. What a trooper. Also, that's why we brought him in. He's got the
casting
military
couch.
secret, so he's our on-staff veteran. So we know he's got all the intel before it was became live. That's why we built it into
That's right.
BitLab Academy and the market intelligence. So I do actually. Smart car applications is something that's been on my mind for a while. I used to keep a running list of like crazy ideas and stuff. I don't do this anymore. But back in like 2017, I wrote out basically a bunch of ideas for smart car applications. Because just like we saw the App Store blow up with mobile phones and all the different applications you could use on a mobile phone, you're gonna have the exact same thing in cars once they get to be more autonomous, as you were talking about, Nick. And like, having a smart car defensive driving app or driver's education app where, you've got stuff on, lines on the road, you got to maintain certain distances and speeds and, lane control and braking and all that kind of stuff. You could get scored at the end of every drive, get a discount on insurance, like all of that stuff. What's that?
I could score?
Score.
Oh,
maybe
different. Never
BJ,
mind.
if you get lucky.
Finally, BJ can score.
As long as you're driving to Dragon Con, you've got a chance, BJ. You've got a chance.
Yeah.
Bro, Dragon Con's like shooting fish in a barrel.
I'm sure it is for you, Nick.
It is,
no,
bro.
no.
You're literally shooting fish in a barrel, right?
Nick,
Yes,
There's
it's
people
actually,
in a
yeah.
barrel. Yeah.
That's
It's a mass
the
casualty
Scaly
event.
convention. That's after the furry
The
convention.
Scaly convention? Is that
Yeah.
after the furry convention?
Yeah, yeah.
Oh, okay.
It starts at like 3 a.m. in
Is that-
somebody's basement. Hey, we're in a basement.
Is that around the Goo Girl convention?
I don't even know.
See, you guys have lost me now.
Goo
You've gone too dark down the nerd.
Goo
rabbit hole.
Girls. Just Google it.
Yeah.
Just do
No,
it.
no,
mean
Image
Goo?
search.
TJ, can I tell you a fun story?
No.
This is in regards to you. You guys sent me so nicely you gave me tickets to sit on the floor at the Hawks game last night.
Yeah.
Yep.
So you got a sleeper right here. You don't understand. I am such a networking person. I went by myself because you handed me these tickets at
Like 5
5:30 p.m. I'm like,
For a 7:30 tip off.
yeah. So
an
I
hour
go
drive.
home, whatever. I get there and I'm talking with this guy and he's had the tickets that sit right next to you on the
On our left. Yeah.
Yeah.
Young guy.
Korean guy.
Oh, okay.
And super, super nice guy. We start talking. He's like, yeah, so if you got these tickets from your bosses, what's y'all's business? It's like, oh, we're crypto media. He's like, seriously, I had no idea. This dude, he's got a 30,000 square foot warehouse that he does all kind of mining, like Bitcoin,
way.
Ethereum. Yeah. He's been in it since 2012,
Nick just
2013.
Nick just looked on the calendar for
Yeah.
the next Hawks game.
Yeah, no, dude, it was the guy was
Well, what was the name of his business? Did you get it?
yeah. Here, let me clean it up.
No. I'll clean myself up.
On your mouth.
I'll clean myself up. That's impossible.
I don't remember the name of his business, but he uses that to fund other businesses.
Interesting.
He's investing in Detroit, the real estate, because it's like investing in Manhattan 25, 30 years ago. But he's been using that money and letting it grow and taking very small profits on each bull run. There's a problem. Most people take profits, or they actually may take that back. Most people take losses because the market drops. Be patient. Sell into the bull run. This is what this guy does every time there's a big bull movement, and then he harvests that and then starts other businesses with those profits. The guy is brilliant. Really, really nice guy.
Yeah, I will say basketball games do tend to provide a better networking opportunity than a lot of the other stuff we do. A lot of really cool people down there, and you can hang out and talk and chat. What are you laughing about?
Network sleeper, but you don't remember his name.
His name was DJ. I was just being polite. Yeah.
There you go. Yeah, there you go. So he does. DJ and a TJ.
I got too many gummies.
What's a profit? Yeah, I can feel that, Raven Boy, especially this year. See, this is why I love the basement. We love you too, Jay Serrano, 88.
Ski, ski.
Let's see, a barrel with no good-looking fish, maybe. Wow, shots fired. All right, yeah. So we'll move on from this hardware conversation. I wanted to talk a little bit about Fed market pivots. I know we've got a lot of traders in here, a lot of people with some experience in the market. So this is somebody, Forza, for all of you guys who don't know, he's a good follow on Twitter. We get, he's a big part of our research team. We're kind of chatting all the time. And this was just an interesting thing, and it kind of rings true to some of the more bearish theories out there. Obviously, we've been talking about on this channel a lot recently that we think the bottom is in. We're dollar cost averaging, or we think we're near enough the bottom. There is, another camp that's saying we still think we've got a big 40 to 50% leg down, dropping from 17 to that 10 range, something like that. And so you want to always be looking at both sides of an argument, right? You don't want to ever be...
Wait, you always want to be looking?
Always be looking. Always be looking. You always want to be considering both sides of an argument, looking for confluence on your theories, on what you're doing. And so this is something like I've been saying with a lot of conviction. I feel like time-wise we're there. This is the first thing that's really made me pause and give more thought to the 10K. I think you're in that 10K camp, right?
I was in like the 12 to 14 camp. Yeah,
Okay.
and I still think it's happening.
Right. I know AJ leans that way. We talk about Crypto Savvy on the morning show all the time. You're under 10K? Okay.
Oh.
So this is perfect. This is a perfect way to bring this up. So it says Fed pivots are lagging in nature, which explains why markets have historically declined post-pivot. But another way, by the time the Fed pivots, the economy will be in such terrible shape, prompting further declines before the impact of interest rate hike reductions kick in. So this is showing
100%.
TJ, I brought up this exact point on the last blockchain basement.
Well, good.
Yeah, we were talking about, everybody keeps talking about, they can't wait for the Fed to pivot. Like all of a sudden the market's going to be let unleashed. Maybe a month or two after that, but there's going to be a large burnout, after that pivot happens. That's where I see us still having a little bit of sideways action, maybe even a false, not the run up that you and I were talking about up to 40, but some small little fake out to the upside, a huge bull trap that then when this pivot happens, we are going to get that washout back to the downside.
Yeah, so couple questions on that. One, let's pull this chart up real quick just so I can show you guys. This goes back, from the 70s all the way up to 2020, showing, when a Fed pivots, meaning they switch from either raising rate, they've been raising rates, a pivot would be they're lowering rates and vice versa. And we've seen, generally speaking, a fall down of anywhere from 25 to almost 60%, obviously with them getting more dramatic once we hit, the post gold eras, so to speak. You can see, right in here when we came off the gold standard, how everything just went whoop. But
yes, it seems like it's about on average around 30, 38, 37% or so, which is massive.
So my question is this: and Nick, and you might have a good answer on this because you do a lot of research when it comes to this, but what is there a technical definition for what's considered a Fed pivot? Because we all expect 50 basis points this next meeting, and so that's not a pivot. That's in line with what they've already predicted they're going to be doing, and I believe even doing a 0.25 in the next one early next year would still be in line with it. What's considered a pivot? Just stopping raises entirely, or what? When would that point hit? Do we know?
Yeah, an inflection point, or what you're about to say?
No, it depends on the market. So the pivot has to be. Some would say we've already pivoted because we've stopped QE, right? We've gone to QT. So they would say that's one part of a Fed pivot. A Fed pivot.
Yeah.
Sorry, guys. My sunglasses are on a little bit too tight today. But But it's so hard to even say what that is now because the economy's detached kind of from reality right now. Like there's so many inflation's high and yet unemployment's low. It's very weird and upside down. So no one's really agreeing on what that actual Fed pivot is going to be at this point. I mean, maybe when they stop raising, maybe, but they may stop raising, but then they may start QE. Like I don't know what's going to happen. It's so hard these days.
Yeah, it is tough. And like looking at this graph, I mean, basically what there's a lot of people are saying it's a lagging indicator, meaning even once they back off, you're going to experience more pain, which is what a lot of people are talking about for 2023. I mean, you could say we're pivoting right now and we will experience 2023, this great recession that a lot of people are talking about, that for some reason, all of this year that we were technically in a recession, they're claiming is not a recession, but then next year we're definitely going to be in a recession, which makes me think maybe we won't be in a recession. You know,
buy the rumors, sell the news.
But then we got Jim Cramer saying that. Now, if I'm saying the same thing Jim Cramer's saying, I'm like, who knows? Maybe it is all crazy. So that's what's tough. But I tend to think we're starting to experience a bit of a pivot now. I don't know.
We're not going to feel the effects of these rate hikes until 3 months from now, because they take a year to really kick in and to really show their teeth. So all the rate hikes that they've been baking in right now, all that's going to pay off in 2023.
So here's something, TJ, maybe you can
and by pay off, I mean ruin everyone's life, just so we all know.
Yeah.
TJ, go to my Twitter. I reshared this tweet from TXMC. It's the second one down. And it's essentially, this is the crazy part about it. It's basically, this hiking cycle is a complete aberration from prior norms because in every market since 1968, the Fed began hiking long before the price peak in the market. Even the Volcker era maintained the trend. Uniquely, the 2022 top came 71 days before the first rate hike. So even though we are looking at data historically, we also have a very different, this time it's different, right? Well, a lot of times it isn't, but there is a very different narrative and basically backdrop to how, why, when, and where these Fed pivots, the interest rates started. So it's going to be interesting to see if there's a different response to now when the Fed does pivot, since the start or the initiation of these hikes started in a different sort of context of where the market was.
Yeah, I agree. That's kind of what I'm looking at here. Like you can see we've already started this fall. Oh. Yeah, they were asking if you're going to be shot out of a cannon later today, Nick. You can see we've already started this fall here a little bit, and so that could, I don't know what percentage that would be. It's probably like 20-something%. So if we go down just a touch more, that's why I was asking when the Fed pivot would be. Like, is this when the market starts pricing that pivot in? And it's easy to go back and start to say like, oh, they pivoted. They came out and said, softer language. I would say the first sign you could say of a pivot would have been the last speech Jerome Powell did that came out and he kind of alluded to softer.
It's getting better now.
Yeah, it's getting better.
But what if everybody thinks that and then he turns around and he does something
crisscross?
that makes the market just complete.
Makes you want to jump.
Yeah,
jump.
but TJ, he got negated because a week later the jobs report came out and he was just like, oh shit.
He was like, oh yeah, actually that was not true. We're still not in we still have unemployment going down or too many jobs or too many fake jobs or whatever that is. So so basically the verdict is Fed's still in control. Nobody really knows what they're going to do or how it's going to work. Could be really bad next year. Or could not be quite as bad as we think. Yeah, that's basically the consensus.
Market could be going up and it could be going down.
This is the kind of decisive information that you get on the blockchain basement.
Here's how I would kind of consolidate all of that into some kind of thought that might make a little bit of sense, which is next year you need to be prepared for almost anything. You want to have, which is why you hear a lot of people saying you want to have cash on the sidelines. You want to have dry powder. You want to have, because what is dry powder? What is cash? It's flexibility. It's options. It's your opportunity to pivot based on what's going on. And I think that's what we've seen in the market is a lot of uncertainty and a lot of fear. And as long as there's uncertainty and fear, you're going to see a lot of people on the sidelines, which could be just a little bit of next year, could be all of next year. And I think that's the big debate. I mean, somebody said in the chat earlier, they can't keep raising rates that high for more than a year, right? Assuming something doesn't break, they'll still just bankrupt the United States. And that is a legitimate concern. There's only a certain amount of time.
Misdirection.
Yeah, the misdirection card. Exactly. Which is what the Fed and the government and powers that be love Yeah, don't forget about doubt. Yeah, fear, uncertainty, and doubt.
Play pot
Thank
of
you,
greed.
Riddle with puns. As long as all that stuff's going on, people are going to be sitting on their funds and they're not going to be investing aggressively, I will say. Now, that being said, we are still seeing investments happening in this sector because it's an emerging, and we do know in a high inflation environment, which is something we've been experiencing in a macro economy, you need growth sectors, which right now, Web3, blockchain, crypto, really is the only emerging, I would say, growth sector because tech hasn't been giving as much as it had in the past. Like that's why the tech darlings were sucking up all the Silicon Valley and VC money because they were high growth. And so at some point, they're going to be money back into high growth. There's always money in high growth because you have the people that have the most wealth taking that 1% to 2% shot on trying to keep that wealth growing, which is what I think we will see next year. Some big money buying businesses, which actually I think, here we go. We have a story on that. I haven't read this yet, and we can kind of parlay into this, but Goldman Sachs to spend tens of millions on discounted crypto investments after FTX implosion. And this is what I think we're going to see a lot of next year. People with money, they would have spent hundreds of millions at the peak, and now they'll probably get similar assets and products for tens of millions instead of hundreds of millions.
So I wanted to say something about that. I was sitting in on a Twitter Spaces, which is now, as you all know, the most authoritative form of crypto news out there. I don't know how or why, but it kind of has turned into that, especially after the FTX deal. But there was a discussion talking about it was Genesis specifically, but they were talking about the potential contagion and cascading sort of insolvencies after FTX, and which ones they could be, and would those things be propped up or basically stimulus given to keep them from falling. And somebody made a really good point that while on a moral side of it, it would be wonderful if that happened because you'd protect people's capital and stuff like that, which we should be doing ourselves, cold storage and good diversification and portfolio management. But the thing about it is it's at the end of the day, it comes down to the dollars. It comes down to we live in a capital market, and if there's a potential insolvency that's going to happen, rather than, or Chapter 11, for instance, Chapter 11 doesn't necessarily mean a company is going to completely shut down and close. It's a legal proceeding that allows them to basically pause their debts, the things that they owe, so that they can restructure where their money is, and then get on, basically reestablish how their business is organized. Now, the thing about it is, if you try to give that $1 billion or $500 million to keep a company from going insolvent, then you're spending, as you just said, these hundreds of millions of dollars, whereas you could wait 3 months, and if they do go insolvent, you could buy them for pennies on the dollar. So why would they actually prop up these businesses? So a lot of times when you're seeing there's a likelihood of something being insolvent, I wouldn't even wait to see if they're going to get propped up, because the likelihood is it's going to go insolvent unless there's something like Genesis with the DCG. I always get the dyslexia.
Digital Currency Group.
Yeah, unless it's something like that where I think that's more of a market manipulation than them actually being on the potential of insolvency.
Mayama Yusufer had a special call out to BJ. Thanks, BJ. I think genome research could produce products that justify similar returns you'd typically only see in crypto, because big money would be happy to pile into that type of risk asset when the time comes.
Yeah, but they also unfortunately lock up the patents. For example, say there's a certain pharmaceutical I want to make, I can basically bioengineer a bacteria to make part of its metabolic process be that whatever the pharmaceutical or whatever molecule I want would be the byproduct of its metabolism. But they lock that down, even though technically you're only modifying a single organism, and then in most cases just feeding it sugar.
It's just
keep
logical.
it going. But yeah, they'll just lock that down for the most part.
That's what I'd say about the medical industry. It's a lot of money that goes into research and development to lock down patents, enforce patents, and IP and all that sort of stuff. And
I still love it though. But
yeah, tends to be another one of those industry that helps the institution that creates it, that has the most money. It can keep feeding itself. Ender's Battle, thanks for the first time chat. Just wanted to wrap this up. Basically, a quote from the Goldman Sachs was saying, we do see some really interesting opportunities. And this was the main thing I was talking about. He says, priced much more sensibly. Matthew McDermott, Goldman's head of digital assets, told Reuters, Goldman sees an increased need for trustworthy players in the industry, which banks which the bank sees as an opportunity. So they are seeing this bear market as an opportunity for them to step in. Obviously, Goldman Sachs heavily involved with Circle USDC, another one that isn't.
Got a sub.
What's that? Oh, hey, thanks for the sub.
Your favorite customer.
Yeah, the Canadian housing market, quantum crypto, has been jacked up for a little while. I watch a lot of what happens in Canada because I do think it can be a little bit of a precursor to stuff here in the United States, kind of a test net for the West, so to speak, which doesn't bode well. Like what's happening with real estate in Canada does not bode well, and it looks like we're set up to see a similar run here in the United States where...
You mean we might hit a recession?
Yeah, it might get very hard for individuals to own their own homes in the United States moving forward. Which
PJ, I wish I had this TikTok up, but there was a new Canadian apartment complex in Toronto. Someone subdivided an existing apartment complex and made apartments that were basically 200 square feet. They're like studios that were 200 square feet, but because they had subdivided actual room, like old apartments that were, 900 square feet, 20% of the square footage of your apartment, of your 200 square foot, was a hallway.
What?
Because you had to like snake back in, because all of them shared like multiple doors.
Yeah.
And all their entranceways were all bunched together, and then they like fanned out. There was this insane overhead of what you were actually getting. And it was just like a tiny room with a toilet right by the bed. It was like a prison cell. But yeah, there's like this tiny hallway that like snaked out. It was awful.
It's like the cage housing they call it in China and Hong Kong and stuff, where they got
It was insane.
They have 22 people sleeping in a room about this size, and they hot bunk too.
Yep.
And it'd still be like $700 US a month.
Yeah, it was
Like,
1,100.
you have other options, right?
It was 1,100 Canadian to sleep in a 200 square foot.
And that's the scary reality of what the future could look like. Hopefully not where we are, hopefully not in the next 10 to 15 years, but this is they sell you the vision or the dream of live anywhere you want, no boundaries, don't be tied down. That's part of the you'll own nothing and be happy. And they show you these really, pretty euphoric scenarios where, oh, it's great, you rent, you do this, that, and the other. But in reality, when it actually gets implemented, it does look like something like what you're talking about, Nick, where it's like you feel like you're living in a prison cell and you don't really have a whole lot of options. And what we're seeing in the more densely populated area, it's definitely moving that direction.
And they're kind of pitching that in mainstream media to like live a minimalistic lifestyle, live small, like, because they already, know that's coming. And big players in the real estate space are already doing that kind of stuff.
It's something I've been interested in for a while, trying to find, 12, small multi-units, whether it's like a 12-unit apartment building, do something like that where you convert top or bottom, figure out a way to do exactly what you're talking about, a conversion where you rent it.
Tops and bottoms.
Old retail space.
You never know.
In a bear market.
Yeah. A lot of people are willing to do a lot of different things in a bear market.
$20
everybody's
is $20.
Everybody's just trying
Somebody
to
came up to me in a bar one
Clip
time and
that.
asked me if I was a bear. I said, well,
Oh gosh.
How much you got?
it's a bear market. Pay up, sucker.
Okay, so we've got Thread Guy here saying LFG, Jim Cramer has just urged investors to sell all crypto. The bull market is back, baby, which that happened yesterday. And then, today, Jim Cramer says he does not see a recession coming. Wendy's saying that's because we're already in a recession.
Dingus.
I've got a clip here. Do you think we can play it, BJ?
Well, let's find out.
It's a bit long. We'll
The bane of my
That's what
existence.
she said.
let's see, 49 seconds.
right?
Basically, I might jump around a little bit here because he lingers on his question asking.
Why do we keep making crisscross references today?
crisscross?
Like you want to jump. Yeah.
Jim, but we got the I don't know how often we hear from the Fed that they say, we're definitely still going higher. That's the lead story. Mike Wilson seems like he thinks this latest rally's petering out a little. What's your feeling on just the overall indexes?
Look at him.
Look, these guys exhaust me, these negative people. Look, and by the way, Jamie Dimon, other than the military, I thought he was incredibly negative. Mike Wilson, negative. Katie Huber, look at the charts, negative. I don't know anybody who's really positive. And
Let me ask before he gives his answer. Do we think he's in line with because it is true we're hearing a lot of consensus general negative from a lot of the talking heads in the banking or financial, the traditional financial world, who have all said it wasn't that bad all of this year, and then say, okay, yeah, actually inflation is bad, it's not transitory, and now they're all coming out saying it's going to be horrible next year. Do we think he's usually in line with what they're saying, or is it standard for him to kind of counter a little bit?
Great question.
I aim to think that it's probably, if he's counter to what the big banks are saying, in this instance, I would agree with him, because I think they're trying to, I think it's like reverse market manipulation. I think they're trying to suppress the market a bit. They're trying to get their entries. And in reality, I do think they're, in terms of the stock, I think we're going to have a push up up until when we get the Fed pivot, and then we're going to have the crash back down.
All right, let's see what he says.
Oh, shit.
I think we're going to come back and take a hard look at things, because there's not a lot of stock issuance, and other than the 2 year, there's not a lot of great investment. Everyone's decided there's going to be a recession. I don't see the recession coming. I think that the Fed's being very deliberate. No one thinks the Fed's doing a good job that comes on air. I mean, other than Greg Hayes. I mean, Greg Hayes is, of course, because of the huge number of munitions that we've spent in Ukraine. He's got a good story to tell, but I'm exhausted by the next.
Oh, sorry, I was just going to look at the memes.
Wow. I mean, I come in, I'm looking for bargains, and I feel like, don't waste your time. Just go buy the 2 year. And I don't think that's right. I think that's what people are going to listen to, though.
So there you go. He's saying basically the big money players, the Jamie Dimons, are saying, don't come in looking for deals right now. Just sit in something safe. You need to protect your assets. And he's basically saying he thinks that's going to get echoed all the way down, when in reality you're probably better off looking for good buys next year, which actually is about in line with what I think for next year. I tend to agree with him on this one. So I don't know if he is a reverse indicator. So we've got two conflicting messages. He says sell all your crypto, but no recession coming.
Because Wendy already said, because it's already here.
It's already here. But like, look at all the other factors. I'm not saying you're wrong, TJ. I'm just saying this is such a weird market that we're in. You see the consumer debt is at an all-time high, consumer savings at all-time lows. We have vehicle loans rolling over and people defaulting on them at the highest rate in a long, long time. We have adjustable rate mortgages about to go nuclear in January. We have people unable to afford rent, and with housing still unattainable, rents are going to continue to go up. Rent defaults are skyrocketing right now. And the largest company on the planet with $2 trillion in cash has stopped hiring, Apple. So,
and a lot of other tech companies for that matter.
And a lot of other tech companies. So growth stocks, which is how all these sickos made their money, they're in the crapper right now. And they're not going to be posting any gains for a long, long time. So I think, there's something to be said about like they're making their own entry point, but that combined with PS, Evergrande has not fixed their books yet, and they don't have to do that until January. So there's a storm coming, and I think that's going to be a leg down. And I don't think that the banks, like Bank of America said, actually, it's not going to be that bad. I don't think they know what they're talking about.
Well, and you got to remember, Bank of America is in a different position than it's not that bad for Bank of America. It's better than it's ever been. Rates are up. They're making more money on every loan that they have out there right now. So all of what raising these rates does, what it is it's giving relief to the banks, because the banks in 2019 were the ones that were at their breaking point. What we just saw happen with Three Arrows Capital, Celsius, FTX, BlockFi, every other big, basically third-party custodian of assets within the crypto industry, that was about to happen to a lot of the big major central banks and other banks in the, all around the world in 2019. They were having a liquidity crisis. They had to drop rates and get basically people spending, people borrowing, make it basically, just like banks dropping interest rates, that's the same as a BlockFi or a Celsius jacking up the APY rates. We need new funds in the system. Please, we're going to make it. We're talking about going negative, basically paying you to borrow money from us. If that doesn't say we're desperate for you to borrow money from us, I don't know what is. And so they were at their breaking point. They had to raise the rates, which they knew were going to wreck these markets. And that's why I think they have to keep them there for at least 6 months or a year to kind of pad those balance sheets a little bit more before they go back into crazy spending through all next year. So yeah, I think the market is basically priced almost accurately. The last, crypto and traditional markets, I think they are pricing in, the Fed, backing down on rates. I think most of the market is pricing in a slow, at least Q1 and Q2, and an unknown Q3 and Q4. I think a lot of businesses and companies, tech companies included, might even be overcorrecting in desire to be over prepared. Like if there is going to be a massive recession next year, say it goes multi-years, 1 year, 2 year, you'd rather be over prepared than under prepared. And so I think that's part of what we're seeing with some of these tech things. And I think right now, right up until the end of the year, you'll see hopefully the things start to swing the other way. But I still maintain you want to have as much cash as possible right now, which is what I think we're seeing from major companies. I think that's what we're seeing from major hedge funds and institutional investing shops. And it gives you the most flexibility long term. And that's what I think, again, that's what we're going to want to need for next year. So, hey, guys, give me a follow. NFT gaming content. We'll check you out. Crypto Logic.
So, another data point here, and I can send this to you.
Let's go.
TJ. Blackstone, the people that they're the offshoot of BlackRock, have been buying all this real estate.
Yep.
They've halted home purchases.
Mm-hmm.
So they are seeing, oh no, and they've also limited investor withdrawals from their $145 billion real estate investment trust.
Yeah, I saw that. That came out over the weekend, didn't it?
Yeah, it did come out over the weekend. So Blackstone and BlackRock, they're kind of one and the same. They've basically done a BlockFi and halted withdrawals.
No more withdrawals, guys. We're not selling any of this real estate.
They're going to get shellacked.
I just bought a Blackstone the other day.
What?
Oh, nice. Like a literal Blackstone? Oh, Blackstone Griddle. There you go. Yeah. So say late to the basement.
Expensive.
I'm here this more like the basement.
Okay.
I'd be in.
Okay.
No girls. I don't understand what that means.
Yeah, there is
a female in the audience today, not on camera.
Yeah,
so
I just assumed her gender, but I'm just
Yeah. Wave. There you go.
Yeah.
What's that's Crypto Rex's wife. Yeah, I was gonna say fiance.
Wow.
Yeah. Oh boy, BJ.
At the moment, I am identifying as a woman, so there's more than one here.
Listen, we make every attempt we can to be as inclusive as possible in all aspects that we can.
No, I don't.
And what we have here right now is we're the most important things no, I'm just joking there. No. We're just ones that were available to do this right now at this time. Everybody else, the women are working harder than us apparently because they're upstairs working while we're here hanging out with you guys.
Hodl Gang said, I'm a nerd. I'd be mining with the boys. Stinking LOL. BJ has removed his ADA staking pool shirt. I'm outraged. Yeah, BJ, for those of you who don't know, used to wear the same shirt every single day of this show for at least the first 10 episodes.
Mm-hmm.
Same hoodie. Yeah, hoodie. It's just so thin and tight, you can't really tell it's a hoodie like a real hoodie. It looks, like a little.
Did you watch
Times
it?
are hard. You got to stick with the same.
That's
hoodie.
right. It's a bear market, guys. So on that note, this is we won't spend too much time on this because I feel like it's been coming up a lot. But the Bitcoin mining difficulty drop most since July 2021 as crypto winter cuts profitability. And I don't know if it's in this article, but I think I saw something somewhere that indicated it should bring fair value to around.
Can we scroll up? Am I the only one whose basement is getting flooded based off that cable management? Look at that.
Oh.
Well, minus those hanging Ethernet cables. But.
You should see I should send you some of the pictures. My brother does a lot of building racks and stuff like that, and he's very meticulous when it comes to cable management.
He's a plastic surgeon.
I was gonna say he works at Hooters. Yeah.
Golly, you guys. He's gonna do a guest appearance on the show at some point. He's nice. Like a Drew on steroids when it comes to researching other banking systems, where the money flows, all that kind of. He knows more about the BRICS banks than all of us combined, I'm sure. So he's got a lot when it comes to that kind of stuff to add. But go ahead, Kelly.
I just wanted to mention, you can pull up the hash rate again. I think this is important. The difficulty, I mean. This is important because, we talk about, I don't know what stage everybody is on their journey here in the audience, but one of the things that we talk about regularly is the 4-year cycle that the majority, if not all, of the crypto market is sort of loosely governed by. And that 4-year cycle is based on the halving cycle, which is, I forget, was it every 22,600 blocks or something like that?
I don't know.
It's roughly every 3 years and 10 months.
Yeah, but the point being is, how can that stay that way when there's more people coming into the network, when there's cycles where
210,000
when things go up and down? Yeah, there you go. Yeah, it has to do with the brilliance of Satoshi Nakamoto is building in these difficulty adjustments, because what happens is when miners are basically not profitable because there's the prices pull back and there's too many people competing, difficulty goes up, and what happens is that makes it more difficult to mine those blocks to secure the network. Now, when there's no profit being made, miners end up getting squeezed out and they have to shut down their miners, which then leads to basically there's not as much competition, which then leads to the difficulty being brought back down, which allows more people to come in to mine. So this helps regulate how many blocks are happening over a period of time, which is why it's pretty consistent, right at about just under 4 years. And there's a guy named, if anybody wants to follow him, The Rational Root on Twitter, who is a brilliant on-chain guy. He does he's got a whole thread that he's talking about this and why it's so important with a lot of this mining hash rate and difficulty. And he even ran scenarios where he was testing it with every different scenario. And no matter what scenario he threw in, it was about 3 years and 8 months to 3 years and 10 months every time. So it's really, really brilliant on Satoshi Nakamoto's part.
It really, yeah, the difficulty adjustment was kind of one of the key differences between Bitcoin's attempt and, attempts of the past of, I think eCash and, DigiCash and a handful of other online internet currencies that people had attempted before Bitcoin. Where I was going with it, it wasn't in this article, but somewhere I saw that this should bring about the average price to mine a Bitcoin to around $12,000, which we've talked about on this channel, how a lot of times the fair market value of a Bitcoin really is that mining number, which can set the price in a lot of different ways or kind of set the barrier. We might wick above or below it, but $12,000 fair market value from a Bitcoin mining price would be right in line with what we're seeing on the technical levels when it comes to, I got 94 words per minute, man.
Show it to him. Show him the octopus.
Unless you're mining in Kuwait, which I think is like, remember it was like, it was something
ridiculous. Like $5,000.
It was,
it changes. That's just that's an average based on where a lot of the stuff is globally and all that sort of stuff. Obviously, the closer you are to cheap power, the cheaper you're going to be able to get your Bitcoins.
DJ, I got a question for you, if you don't mind, like switching the questions just a little bit. I keep hearing it a lot, and I'm anxious to hear what your guys' thought is on this. Just in general, do you guys feel like the government is going to push that dirty mining to more of like the cleaner energy, the cleaner mining, the waterfalls, the volcanoes? Do you guys feel that Bitcoin mining is going to like literally
hydro and
be forced in that way?
geothermal for everyone else?
Yeah, well, I think yes, I think ESG scores is basically a key plan for governments around the world to shape the global narrative, and to basically have some power as they're losing power with dollars and sanctions and stuff. They're going to use ESG, so I think they're going to start applying that to Bitcoin mining companies and start using that ESG score to try to dictate the way funds flow directly or indirectly, in my opinion. Go ahead, Kelly.
But in addition to that, though, like some of the most profitable miners with the largest margin are ones that are using green energy. So more than a government pushing you to do it, saying you need to do this. They want to do it anyway. You want to know what makes people do something is their ability to make money on it.
Right.
If they can make, so in all honesty, and I want everybody to take this home with them in their minds, share this when people bring up, but Bitcoin's bad for the environment. It's like, well, first off, whoever says that to you, just tell them to take their hand and just face palm themselves.
Take them by the back of their head and put their face in poop. Because that's where it belongs.
Because at the end of the day, this is going to be the biggest driving factor in pushing the technology for what do you call it? Green energy.
It's a green energy incentivizer.
We need Bitcoin miners everywhere so we can push this green energy forward if they really want it to be pushed forward.
Yeah, no, it's 100% true. That's when we sat down with CleanSpark, one of the larger publicly run companies in the United States. CleanSpark, a major Bitcoin mining player. They're based, they've got some facilities in different places, but a couple here in Atlanta. We went and toured their facilities, interviewed them. They told us all kinds of stuff they've done to actually upgrade their local power grid and everything around them, because the more energy you can save and not have wasted, the more efficient your mining becomes, the more profit you can take, the more you can upgrade the system. And then it becomes a positive network loop that allows you to, a positive feedback loop that allows you to continually incentivize for cleaner and better energy, which again, that's what we've seen. That's why in El Salvador, they're talking about trying to use the energy from a volcano for Bitcoin mining because it produces an insane amount of energy. And if you can harness it in a safe and a clean way, which is why a lot of people are big fans of nuclear energy. The incentives are there, but how the government uses incentives to control people, that's a whole different story.
So yeah, by the way, if you're not pro nuclear energy, you were dropped as a child. TJ, I want to know what you think. You're talking about ESG, but Larry Fink, the guy who basically created ESG, has denounced it. How do you think that's going to play out over the next 5 years?
What was how did he denounce? Basically, what did he say? How hard did he denounce it?
Pretty hard.
Okay.
Wait, did he denounce it, or was he denouncing the way in which it's being used to manipulate things right now?
Yes. I mean, yes. But he said basically the way ESG is set up, it basically incentivizes greenwashing, and there's no accountability built into the system. So we cannot use that as a way of judging investments. That's what
if he set it up, you should know that.
Well, that's why he did it, but now it's out of his control, and he can't.
I don't know.
Because everyone's like, because he's seen what happened with the European power grid. So the ESG informed the entire European, that and an autistic Swedish girl, informed the entire European energy policy. That's what she is. I'm not being.
No, it's fine. Yeah.
Yeah, no, but so. And now they're seeing, oh, wow, this is a huge, giant problem. Larry Fink is backtracking. How do you think that will play out over the next 5 years?
That's a great question. I'd have to get more into the direct relationship between Klaus Schwab and Fink, and if there's a power struggle going on there between any of that kind of, is there internal battles within the World Economic Forum and their plans, and but as far as I know, ESG is working as intended. It's the only real leverage a lot of these governments have over these conglomerates really at this point that have gotten way more powerful than most government. I mean, you've got United States, you've got China, you've got some big governments that do still have some power, but you get outside the top 5, there's really no country that has a lot of sway over the Apples and the Facebooks and the Googles of the world without something like an ESG. And now, it's completely bogus the way it's implemented right now and the way it's used and the way somebody like an Amazon can be like, oh, we're a completely green energy company. And you can see the way Berkshire Hathaway manipulates it already with the way they buy and sell different companies based on ESG scores and based on having inside information about changes that are coming to that in the future. It's not even, I guess it's public information. They just have the means and the wherewithal to act on it. So it's definitely a system that's being gamed right now. It's not a benefit for society in any way. If anybody's trying to pitch you that it's better for the world, it's all just a farce, which is something we've seen a lot in that regard. So I don't know. I don't know how to answer that question of the battle between Fink and ESG. Put it this way. If he proposes something other than ESG, I would look at that extremely critically and try to understand what's the end game. Because if he's proposing something other than ESG, it's probably because there's a reason and he's got an angle and an incentive for it for himself. I haven't seen him be putting society first other than in speech, if that makes sense.
Well, another consideration about all this also is that as much as it would be, whether or not you're somebody that really believes in the greenhouse effect and all this sort, wherever you're at on the spectrum, whether you're all about oil or you're all about green energy, no matter what, in order for this to take, has to be something that's going to take place over 30 or more years, because our world economy is like we say the dollar is the US dollar is world reserve currency. If you really think about it, oil is a world reserve asset. That is what the entire world economy is really rooted in. And so as much as it would be nice to have cleaner energy, have a cleaner planet, have all these things, it's going to take time. We can't. We saw this going on right now in California, and I'm not trying to call them out, but I'm going to call them out. Right. It's like, okay, it's all going to be electric cars by 3-4 years from now. But everybody, you can't have air conditioning, and you can only charge your cars on Thursday. It's like, because they don't even have
They can't do
they
it.
don't have the infrastructure in place. And so in order for us to switch over, this is going to be a long, patient thing. It should be in our goal. It should be like in our focus, but it's something that we can't just turn the switch and all of a sudden turn off everything oil. 90% of the stuff you use every day is based on oil, whether it be plates or small, thingamabobs or
look at me.
plastic or
Don't look at
these
me.
glasses, it's
Never
all oil,
look at
baby.
me.
Yeah, somebody made a good point, about that today. You hear a lot of these anti-Bitcoin people making all this noise about energy waste. You don't hear them complain at all about Christmas lights or concerts or any of the other stuff that wastes tons of energy. Somebody mentioned Sri Lanka has an 85 out of 100 ESG score and they went bankrupt. Somebody else, I know there's a couple other countries out there, really high ESG scores, really terrible economies. And that's the problem is they come out and they make statements and they say, oh, the government's going to fund doing this. And it creates all these incentives that private companies can take advantage of and make record profits. But then you end up in a worse place as a community, as a society for exactly those reasons. You're having, rolling blackouts out there and, a lot of that kind of stuff.
I love it. Idea for new BitBoy crypto show. You guys should do a web redemption show like Tosh used to do, where you interview the low IQ people who got roasted in the chat.
That will not end well.
Yeah, that doesn't.
No. Tell us what you're thinking. Give us your substantiated. Okay.
Nope. Still low IQ. Moving on. No, just kidding. Tim Pudding, first time chat, says it takes oil to make these green energy, so you pollute now to hope to save from using more later. Yeah, in theory, I think that is the logic of like, hey, we're gonna make the environment worse, but eventually it's gonna get better. We promise.
Yeah, but I've complained about this before. It's like hydrocarbons and aliphatic chains are just that. It's like carbon and hydrogen that you can get from alternate sources. You can get them from plants. There's a lot of these plastic polymers that you can also start basically mimicking with like mycorrhizal association and a lot of mushrooms and other stuff. But it's hilarious that they keep pushing away from all of this when it's like, oh, we pull it out of the ground and can control the source, or we can
make a completely synthetic. Yeah.
Yep.
Well, not even synthetic, like an organic thing. That it's just like one of the biggest issues with farming and how we're destroying everything with nitrogen and everything else. It's like, cool, rhizobium from mushrooms. Like, there you go. You fix your farming issue. You create your plastic alternative and everything else. Like, there are solutions there. They're just absolutely stifling them intentionally.
Right, because there's not enough money there. Generally speaking, when
oil,
right, they can
oil economy.
Right, and somebody said it in there about perverse incentives create more problems, which is which is the problem we've seen. It's really the problem with centralized authority. When you try to create a plan and the power and the money all comes from this point, the people closest to that are going to pervert that incentive to their own gain, which is kind of like what we're talking about with the medical industry. I think he's eating mushrooms. Yeah, well, that might happen, not in this basement necessarily, but maybe not too far away.
Next studio over.
Probably key.
That's where you go. Mycelium is key to the future. Where's chemistry bro today?
Chemistry
bro.
bro.
Think he'd be in there. He's got to be a
skipping
mushroom
class.
guy.
Become bio bro with me.
Psilocybin.
Somebody did say it looks like we're gonna tick back above 17K. That'd be fun to do right before
I'm
the
very
end of the show.
disoriented right now, TJ, because
Welcome to the basement.
You're typically so detail oriented, and you had a purple can that matched everything, and now you have a clear cup.
No, I didn't put. That's
It's my
Brian's cup.
cup.
My
Brian.
can. I just finished it. I just
at that.
crushed it.
Green New Deal right there.
There you go.
Crushed it.
Truth
It's whoever
justified.
sits. I can't control what happens to my right. Don't hold that against me. All right, I did have one more question. We're running short on time. We got a couple of things we have to get to. This is just for fun. I will hide. Well, I don't know if I'll be able to hide my answer, but no, I guess not. But a poll from Mr. Beast. If someone offered you $10,000, but if you take it, a random person on the earth dies, would you take the 10K?
That's closer to 50-50 than it should be.
Exactly. I voted no, but it's very close to 50-50 with a solid.
Like, I'm
10K?
sorry.
Where are the vote? Yeah. Oh, almost 1 million votes.
Don't random people die every day?
I bet if I refresh it, it's even more votes. So let's
Wow, Kelly.
Yeah, but not a direct.
Wait, hold on. Let's
result
before
of
we
this.
That was
before
just
we
a joke. I would
before we
press
rage
no.
on everybody, I wanted to ask Nick Tater. You take the money?
No.
Kelly, Rex, Brian.
10,000? That's it?
That's it. Yeah.
No.
Okay, let's do this. 1 million.
No.
Nick?
No.
Wait, do we get to
No.
pick the person?
Kelly? No,
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 it's
random.
random.
It says random person.
know the person who died.
Random person on Earth.
$1 million Bitcoin.
$1 million.
No.
No?
No.
Rex?
No.
No? Brian?
Random? Ah. No.
No, but that's you.
Okay, hold on.
No, that's you deciding your life is worth more than theirs, which gets into this huge philosophical thing. But the answer
How many
is
lives
no.
could you save with $1 million?
I mean, that is a debate. in
Oh,
itself.
that's a good. That's
That's
a
what
good
I
angle.
thought too, but it's
yeah.
Not that many. Yep. Not
All right,
that many.
10 million. Nick.
Yep.
Okay, Kelly.
Start a charity, but yes.
Rex. No.
Here's the
BJ?
thing: that random person could be you.
Hey,
People don't think
it
about
could
that
be.
part.
That'd be very low odds, but it's possible.
It'd be a weird lottery for me to win.
Yeah. Hey, thanks next to Ken, I guess. BJ, 10 million, yes or no?
I plead the bye.
Okay, Brian,
do I have to know who the person is?
you don't have to know.
It's random, but you might.
You might.
You have to look him in the eye.
It could be TJ.
I'm still gonna say no.
Oh, wow.
There's no amount. The Matrix.
Well,
says.
we know who's not going to be rich in
What
the bull
is there
run.
a number? What's the number? 100 million? 20 million?
A Billy.
I'm just curious. I mean, I'm not trying to start
Hey,
anything.
everybody's
No, I
everybody's
know,
got
I
a
know.
price.
TJ, what about you?
I'm trying to be honest with myself and actually like really think about it.
He's like 10,387,000.
Yeah, actually, I have no idea what it would be for me. I don't think
It's really hard. Like, yeah,
like,
it's either a
here's the-
no or a yes, regardless of the money. I think.
Statistically, it would probably be someone in China or India, so you wouldn't know them.
Yeah,
Well,
I'm
like,
pretty.
here's the argument
that
going
makes
back
it
to where you're
Does
saying
that make it better though?
the amount of
Then I
money
don't
to
know.
save somebody's
30
life.
million.
No, it has
sure,
nothing to do
I say.
that. I'm just saying
Hellfire says 100
statistically.
million. Matrix says there's no amount.
Not be, yeah, if I'm like, yeah, I get to nuke a
1 in 8 billion chance it's you. Random person is part of FTX for $1. Yes. That's funny. I would bring them back from the dead for 10 million. I don't know. It's tough for me.
yeah, what's your price to be a murder? Yeah, duh, that's what we're doing.
Yeah, exactly.
10K to murder someone?
well, I
no
don't-
Wait,
way.
wanna get
to be
canceled,
fair
but-
for the FTX, though,
I don't know. I don't know what the answer
I
is.
hope
for me.
people know this. To be fair to
like asking
anybody
is
that
even
was a
human
part of
meat.
FTX, I doubt that it trickled down into the entire organization.
I agree.
It's
I
very,
agree.
very top level stuff. So if you do know somebody that worked there, was, doing social media, like, I doubt they had any sort of like knowledge of this. So yeah, be a bit compassionate to them. But to people at the top, yeah, they could take a hot Carl any day.
All right. Well, that's pretty much all we have time for today, guys. Appreciate you hanging out with us in the basement. Come
Who
back.
are we
We're here
rating?
Monday through Friday, 1:15.
Put them
Hit
socials
Gaming
up.
should be on if they're on there. We can
Who are
rate
we
them.
rating?
Hit Gaming if they're on. We should
not.
be able to. They're not.
We got Dr.
And,
DJ.
and you can find me since this gentleman here just didn't put me in. I'm at Hotboy67 at Kelly Kellum.
And BitLab Academy, guys. If you
Oh,
guys
at-
haven't
at-
signed up for BitLab, there's a special. Not one. I keep calling it 101. A special.
Tomorrow at
Yeah,
3:30
perfect.
p.m. we're doing and if you've bought BitLab Academy membership or the indicators, you'll be able to come to a private training we're doing tomorrow from 3 to 4:30, 3:30 to 4:45, 3:30 to 5 tomorrow. So just go to bitlabacademy.com and follow us at Academy BitLab on Twitter.
Yeah, share your friends. Share this with all your friends. Smash the like, subscribe, follow, do all the things.
Hide your keys, hide your wife.
Don't murder anybody while you're out there. See you guys tomorrow. Save your crypto. Self custody.
Okay, bye.
Bye.